Hello and welcome to a CNBC TV18 boardroom. We're in conversation with the top management of Wipro and they've just given a very dismal, muted Q1 guidance. Srinivas Palya, the CEO of the company, Aparna and Saurabh, all of them, the top management now joining in. Srini, let me start with you. First, your guidance. In COVID, you chose not to give a quarterly guidance. I remember that about 4 years back. This time you did, but it's minus 3.5 to minus 1.5. What exactly are you seeing in the macros? Are we seeing deals getting cancelled? Are deals being put on pause? Because this is a very muted guidance.
Sure. Now, let me start with the financial year 25, right? And overall, we've seen a degrowth at a company level. But having said that, if you look at Americas, which contributes to 63% of our revenue, it grew by 1.2%. APMEA, which had shown a degrowth in the Q4, it actually grew sequentially. I think for us, Europe has been soft last year, and it continues to be soft at this point in time. But having said that, if I have to look at where we are in Europe, we have got a new team. We have also won a large deal. And on top of that, we have a strong pipeline in Europe. And most of the pipeline is around cost, because that's where most of the clients are really thinking around what they should be doing. So if I look at overall macro environment and the uncertainties that are there, what the clients are doing is scenario planning. They're looking at what's going to happen, because every week there's a change, and you got to adapt to that change. So some of the industries like consumer industries, manufacturing, especially automotive and industrial, having a significant impact because of what's going on with the tariffs. But if you look at sectors like BFSI, they are looking at the stabilization of the whole economy, which will also impact how they're going to take decisions on discretionary spend. So what we have done as far as our guidance is concerned, we looked at all our clients pool across the markets that we do and across the sectors. Based on that, we have taken those inputs from the clients and we are given the guidance of what you're talking about. And there is definitely uncertainty in the market. We are hoping in the next few months, things would settle down and the clients will come back and restart the discretionary spend.
You spoke about how a large transformational project was paused by a client in Q4. That was one client. Were there many other instances where projects were put on hold, cancelled or ramped down? Tell us more on that front, and how much did it impact growth in Q4?
Sure. So that was an anecdotal example that I gave, because this particular client was right in the middle of what was going on the tariff. And what they did was they just paused because they want to make sure that how the tariff will go, because that is a big input into the whole transformation program. So that's one example I'd given. I think what we are seeing more and more from the clients is the new projects, discretionary spend, when they need to start them. I think that's a delay that I'm seeing. But overall, if I look at our pipeline, which is very robust at this point in time across Americas and Europe and APMEA, and majority of those deals are also more around the cost transformation, influencing through AI optimization and improving the customer experience. Those deals to me will continue, because that's going to help the client in a situation which is a lot more uncertain for them.
Bear with me, Srini, as I ask you some more questions around the visibility that you have, because that's really the crux of what everyone's trying to grapple with. So I understand that there is some debate, hesitancy in starting new projects, discretionary spending, etc. But what about the existing projects? Any cancelled? You spoke about one, but any other pauses, ramp downs? What's the extent of that?
Not at this point of time, because when we gave the guidance to the street, we looked at all the puts and takes, if you will, and based on that, we are given the guidance. And the idea is we will be within the range of the guidance that we are given. So going back to your question, what are we seeing with our existing clients? I think we have a much better visibility at this point in time. But having said that, I don't think any of us can predict what's going to come in the next few weeks or few months. And that's where the clients are doing the scenario planning. And what we are doing is working with the clients and helping them in this scenario planning, so that we can have a journey which is mutually beneficial to both of us.
So if in a few words you have to classify tech budgets, how would they be right now? Are they lower compared to what was expected 3 months back?
See, one of the things that we continue to see is investment in Gen AI. So those projects continue to, clients continue to spend in those areas. I think some of the projects and programs which they think is not necessary to get started now, maybe they will delay that. And some of the transitions that we are doing right now for the client, more which is going to be beneficial to the business, they continue to do that.
So do you think on the whole FY26 could be worse than FY25?
We don't guide for the year. So all I can say is you have seen our Q1 guidance. Obviously, it's minus 1.5 to minus 3.5. But having said that, I'm emphasizing this, that the deal pipeline is very strong. And if you look at last year, large deal wins have significantly improved for us. And we have a strong large deal engine that's working for us. And the pipeline we have, the focus right now for us in this quarter is to convert that pipeline into deal wins so that starting Q2, we can have the revenue momentum coming from those deals.
Okay. Aparna, your margin defense has been solid in the face of macro uncertainty. Can you tell us about the headwinds and tailwinds, what the margins faced in Q4, and what is the outlook on margins going ahead?
Yes, Rima, you're right. Our margin defense has been solid. In fact, we've improved margins year on year by 90 basis points or so. This has been possible because of strong execution excellence across, all parts of the organization, and it's been a one Wipro effort. We've seen fixed price programs improve their productivity. We've seen acquired entities improve their profitability. We have rationalized overheads. We've also rationalized staff who are non-client facing in some of the functions and roles in G&A. So all around, it's been a very solid performance in FY25. The rupee depreciation offset by the crosses also pitched in the second half. So it's been a good performance in FY25. As I look forward, the headwinds will remain a weak revenue environment. Added to that, like Srini mentioned, a lot of the pipeline and deals that we are in, clients are looking to take cost out. There is vendor consolidation. And as you know, these are very, very competitively fought deals. And they will have a pressure on margins as we look forward. What are the levers ahead? What are the tailwinds? Pretty much the same that we've driven through this year. I think we will have to accelerate, the benefits of AI in our fixed price programs, and we are actively, looking to do that.
So 17% plus margins, Aparna, you should be able to hold?
We don't guide for margins, Rima, but that said, we have said our endeavor would be to hold it in a narrow band. So, 17% plus.
Okay. So you'll maintain margins in a narrow band, which is around 17%. You spoke about how these large deals are, competitively fought, especially when deals are harder to come by given the uncertainty and the tough macro. Do you think there is some element of pricing pressure?
Oh, there is pricing pressure for sure. Is this any worse compared to how it was, let's say, a few quarters ago? I'm not sure. How do I contextualize it? But I do see that increasingly a lot of the large deals are vendor consolidation and cost takeout. So, yes, they're quite competitively fought, and therefore it does have pressure on margins. But that's where we'll have to work on how we deliver and how we can deliver more efficiently and how we can keep some of those productivity gains with us in order to improve, the profitability. So it's all about rate realizations as opposed to the rates that you're selling at. So we'll have to make sure we're able to deliver the same with lesser people.
Srini was just telling us how consumer, manufacturing, especially auto and industrials, are impacted the most. What percentage of your revenues would come from these impacted verticals?
We do call out the industry vertical mix. We call out consumer as an industry, and we also call out EMR. Collectively, so we don't really call out only manufacturing. We were reporting up until that. So collectively, there must be about, what, 30% of the business?
Okay, got that. Saurabh, TCS sort of surprised the street by saying that they're not doling out their wage hikes, which they normally do 1st of April. I mean, is the situation that bad that we have to hold back on wage hikes? I know yours are not due, anytime soon. But how are you thinking about wage hikes and hiring going ahead?
So 3-4 things, Rima. One is, as you rightly said, we did it in September, so we are far off. But the market remains uncertain. The macro environment is uncertain. We heard it from Srini and Aparna. From a hiring perspective, we have gone ahead and hired around 10,000 people from the campuses as we had called it out. We have a plan to onboard people, but we are also cognizant that we should not onboard and then not able to deploy. So we'll see how the market looks at market growth comes in the coming year. But we will have to just see it quarter by quarter is the only thing what I can say. So far, we have been able to make sure that all our people actions, promotions are happening every quarter. We did a salary increases ahead of time. We are giving variable pay. The full year variable pay is around 95% to a majority of our employees. So it's been a more consistent approach from an employee expectation and aspirations point of view, which has also helped us in managing our attrition. We also see that we have headspace from a utilization standpoint, which will help us deploy more people. So all this will drive hiring plans for the coming year, and we will closer to the time when we are there for our salary increases. Maybe in some time in Q2 is when we will have a better view on how the market is and what we intend doing.
Okay. But you're saying there is a possibility that you will not onboard all the freshers that you've committed as of now?
No. We have onboarded everybody whom we have committed. For the new fiscal, our plan was to onboard about 10,000 people. We'll have to see how it goes. So far, whoever we had committed, we have onboarded everyone.
Okay, got that. Thank you. Thank you very much, all three of you, for joining in, and wish you all the best. May we speak in better times after 3 months.
Thank you.